The S&P 500 fell from close to 4,600 points on 31st July 2023 to close to 4,300 points on 30th September 2023. And I know that this is not even a market correction, but a lot of people are panicking. To put the numbers into perspective, it's about a 6.5% drop. And to even qualify for a market correction, we are probably looking at a 10% drop. But I do understand that this may be quite a difficult time for you because some of you cannot bear to see any losses on your portfolio. For example, if you're looking at a 6.5% loss on a $100,000 portfolio, that's around $6,500, which may be a person's 1 month's salary. And I know how devastating is that. It is definitely not a good feeling when you realize that you just lost 1 month of your income. And some of you probably more than 1 month. And if you were to ask me if I'm worried about this stock market crash, although it is not financial advice, I will tell you honestly that I used to be really fearful of stock market crashes because I was picking individual stocks in the US equities market, which could drop more than 10% in a day. But I have since moved on and now focus on using the dollar cost averaging strategy as my main investment mode. And before I go into the specifics of what dollar cost averaging or DCA is, come and join us at over 10,000 members at our Honey Money SG Telegram group to join like-minded investors. So some of you may ask, what is DCA or dollar cost averaging? And I'll put it in a very simple example. This is where you will invest a fixed amount of money over a regular period into a single ETF or stock if you prefer. Example, if you invest $1,000 per month into the S&P 500 ETF every month regularly, and that will be a dollar cost averaging strategy. You see, the $1,000 a month is a fixed amount, but what is changing is the number of shares or the quantity of units that you are purchasing because of the change in price month over month. So if the stock or ETF is $100 per share, with $1,000, you could buy 10 units. And let's say in a bull market, the share price raises to $110. Now you could buy less than 10 units because that is 1,000 divided by 110, which makes it 9.09 fractional shares that you can purchase because the price has already increased. So when the price is more expensive, you buy less quantities. And let's look at the opposite direction. Now, assuming the market is down and the share price is down $90 per share, with $1,000, 1,000 divided by 90, you could buy 11.11 fractional shares. And now you could buy more units with the same $1,000. So that is how dollar cost averaging works. When it gets more expensive, you buy less units. And when it gets cheaper, you buy more units. So it's kind of like a fixed amount, but you change the number of shares. And if you're inclined to use this dollar cost averaging strategy, then maybe you should check out the sponsor of today, Webull, which is offering its regular savings plan. Now, I'll share a little bit of information on how you could dollar cost average on other brokers because there are multiple steps involved. Firstly, you had to set up a recurring order or trade on the platform itself, and that is just the first step because the next step is the funding. And you know you have to do manual funding like deposit cash and make sure that you have enough foreign currency, maybe in USD because you are buying a US dollars denominated stock or ETF. And funds transfer may not be really automatic because you have to log into the internet banking and set up recurring transfer or standing instructions. And those would require multiple authorizations to make sure that your funds are in the right place. So you have to set up instructions on both your internet banking platform as well as the trading platform, which is two platforms that you have to meddle with. And of course, with more manual work done, there will be chances of human error that you may transfer the money to the wrong account or you may set up wrong trades. So Webull's RSP feature will help you minimize all the manual work involved and you could just do it on one single platform, which I will demonstrate to you step by step. So if you look at my screen here, it shows that I'm going to purchase SPLG, which is an S&P 500 ETF. So I will search for SPLG on Webull's trading platform and I will tap on the regular savings plan, which you can see on the Webull app. Then you can enter your investment amount, the payment method, and the frequency. And for my example, it is $100 per month and it will be directly funded from my bank account. So you see, there's no need to do any funds transfer because what I did previously was that I link my bank account into the Webull's trading platform. And now Webull has the authorization to draw funds from the bank account directly. Do note a minimum commission of 50 cents applies to regular savings plans order as well. So there are no additional steps required. All of this is automated and authorized on the Webull platform itself. So you don't have to go to your bank again after you have linked the bank account. And you can see that it saves time it reduces manual effort, and most importantly, you can now invest in your favorite US stocks or ETF automatically via Webull platform. Webull does not only have a regular savings plan for stocks or ETFs, but they also have a recurring deposit for cash. So if you just want to deposit cash regularly in order to park your cash into the money pool feature and earn some high returns on your idle cash, then you can also use the recurring deposit feature, because money pool is giving around 5.4% on USD cash deposits and around 3.7% on the Singapore dollars deposits. For new to Webull customers, remember to check out their welcome rewards, where you can win rewards worth up to $3,000. The terms and conditions are rather straightforward. All you have to do, fund any amount and maintain that fund for 30 days, and you will get a total of 6 free shares, with each free shares ranging from $10 to $500. So if you want to win all these attractive rewards and use Webull as your preferred investment platform, sign up with my referral link down below or scan the QR code right here to get your Webull account today. Now, if you want to ask, are there any other platforms you could use to DCA? Of course there are. For example, for CPF, I'm currently using Endowus to put in like $2,000 monthly into 2 of their unit trusts, which is the Amundi Prime US Fund and also the Amundi MSCI World Index Fund. But that's because I'm using CPF funds. Then for cash funds on other platforms, you can also try out interactive brokers, but that will require multi-step processes, which I have detailed out in another video right here. So just test out platforms and see which one do you prefer. So I would like to touch on why I prefer to use the dollar cost average strategy. I think the main benefit of DCA is that it provides emotional resilience and discipline, because you would invest a fixed amount, the same time, the same amount every month automatically without fail. And you do not have to watch the markets every day, because you know that your investment plan is set every single time. But this is on the basis that you are dollar cost averaging into an ETF. For example, the S&P 500, and not individual stocks, because for individual stocks, if you are doing DCA, it requires a different set of skills. To really perform effective DCA, I think the best way is to be as passive as possible, automate it as much as possible, and less manual effort involved. And that's how Webull's RSP could help you achieve it, because the trade orders, the funding, and the currency conversion are all handled within the Webull's app itself. So when you look at stock market crashes during periods like this, you can stay disciplined and not acting impulsively because the market is crashing, but you know that your DCA plan is already activated and in place. But do know that investing using dollar cost average strategy is just one of the asset classes where you can place your funds with. There are other asset classes where you can look at to generate passive income, like if you want a lower risk option, you could look at SSBs or T-bills, or even high interest savings accounts, or even properties if you have that much capital. Or if you would prefer, maybe starting a business or side hustle will help you generate additional income on top of your day job. And if you want to know how do I allocate my own cash in terms of my cash strategy, then I'll refer you to this video where I show you how I allocate my cash across different platforms.